5, 6, 7. Good evening, everyone, and welcome to the 112th ANMI Knowledge Series webinar. Today, the special topic what we have today is the launch of base metals mini futures. I welcome each and every viewers of us to this wonderful session of webinar, which is done by ANMI. Today, we have Mr. Kamlesh, Shah, the president of ANMI, who will be giving later on the introductory remark a brief description about the webinar, which is going to happen this evening. We also have Mr. Rishi Nathany, Chief Business Officer, MCX. To tell a few things about Mr. Rishi Nathany, it is that he is a commerce graduate, a certified financial planner, and an alumnus of IIM Kozhikode. He has over 25 years of rich and diverse experience across the financial services domain, from equity, commodity, currency, and insurance broking, financial planning, training, wealth and portfolio management to the exchange business. Prior to joining MCX, he held CXO level positions in various financial services, companies, and exchanges. A passionate writer and speaker, his articles of finance and markets regularly appear in various media. He is regularly invited to speak or moderate at various industry events. He has imparted intensive training programs to leading banks, fund houses, and insurance companies. Good evening, sir, and welcome you to the webinar.
Thank you.
We also have Mr. Chittaranjan Rege. Mr. Chittaranjan Rege is currently head base metals at MCX. He has over 22 years of experience in financial and commodity risk management areas. He has been successful steering the base metals vertical at MCX. He has been responsible for successfully converting the base metals contract at MCX from both options to delivery-based settlement mode. Previously, he has been associated with ANMI, Hindalco, and Maclay Financial. We further call upon our speakers, Mr. Jigar Pandit, Head Commodities Business, Sharekhan Limited, Business Head Commodity and Currency, Sharekhan, with more than 25 years of experience in the stockbroking industry. He has mastered himself in making broking business profitable with adverse market moments also, and have evolved himself into understanding the pulse of digital retail broking with changing market dynamics and client understanding. In addition to the retail broking space, he has expertise in algorithm trading and instrumental in setting up Algo Desk in Sharekhan. On advisory board of MCX and MCXCCL, has been instrumental in giving critical inputs, which has helped introducing new products and helped the industry exchange and regulators in making foolproof policies for the benefit of clients, along with the development of the whole ecosystem. We also have Mr. Ramesh Varakhedkar, who is presently heading the commodity and currencies vertical at ICICI Securities Limited. He brings with him an immense experience of over 2 decades across banks, exchange, and broking industry. Prior to ICICI Securities, he has worked with Karvi Stock Broking Limited, MCX Stock Exchange Limited, Citibank NA, and ICICI Bank. Mr. Varakhedkar is trained in management through the Accelerated General Management Program from IIM Ahmedabad and MDP Program, Executive Program in Applied Finance from IIM Kolkata. We also have Mr. Sunil Katke, heads Commodities, Retail Business at Kotak Securities, a top bank-led broking firm in commodities. He's an MBA in Finance and Marketing with rich domain experience of 18+ years in commodities and currencies. Prior to Kotak Securities, he has contributed in setting up commodities and currencies businesses at Axis Securities, Anand Rathi, Angel Broking, and Rege, and features on prominent business channels like CNBC, Z Business, 80 Now, and I guess many more of them. We welcome you all to this wonderful evening of the 112th Knowledge Series organized by ANMI. Thank you very much for being there. And I asked and request Mr. Kamlesh, the president of ANMI, to give a brief introductory of this whole event. Over to you, sir.
Thank you very much, Steve. Good evening. On behalf of ANMI, I welcome Mr. Rishi Nathany, Mr. Chittaranjan ji, Mr. Ramesh ji, Mr. Jigar Pandit, Mr. Sunil ji, Mr. Sanjay ji, and dear members. I thank Rishi Nathany ji and MCX team for associating with ANMI. I compliment them for this initiative for educating and awareness, also skill development of members and investors like today on the launch of new mini contracts in base metal. I feel approval of mini contracts by SEBI is a welcome step and will add new contract basket for MCX for all the participants, especially MSME, retail investors, and traders to trade and hedge their price risk. Those who were unable to participate in bigger contracts because of its margin and the cost will now get an opportunity. Also, it will enhance liquidity and the volume of the contract. Mini contract was discontinued in January year 2020. At that time, it was contributing around 25% of the base metal volumes. Reintroduction of the contract will help build volume for both the regular as well as the mini contract. Typically, because 1/10 of its size helps in managing risk efficiently. It will also help in index composition. In absence of mini contract, it was difficult to build the index. And by the introduction of mini contract, it will help build index composition by sealing gaps, and thereby participation in base metal indices also will increase. Base metal is going to be a very important commodity considering opening up of the China and the world economy gets stabilized. It will provide hedging opportunity to the small businesses and the retail investors. As a member association, we welcome and compliment all the initiative of the exchange for products innovation and the new contracts. I must say that the new contract offering continuously makes MCX the leader in the commodities. I once again compliment MCX for the initiative to sharpen members' knowledge with ANMI and wish them all the best for the new contract. We see a lot of scope for the commodity market to grow, and the introduction of mini contract is step in right direction. Let us understand in details with the expert panel. Thank you all for the participation. Thank you.
Thank you so much, sir, for the introductory remarks, sir. I request Mr. Rishi Nathany to take on all the webinars.
Thank you, Steve. And thank you, Kamlesh ji, and ANMI for partnering with us for this event. And thank you for all the speakers who have come here, Ramesh, Sunil, and Jigar. It's a pleasure to share the panel with you. MCX has always endeavored to bring more and more unique products and participants to this market. And we have seen that as this market has grown and is maturing rapidly, we are seeing more of these products being utilized by the market. If you see, and I'll give you some numbers, is that before, like Kamlesh ji said, that in 2020 minis went away, and that time, however, you cannot compare the numbers from then and now, because that time the base metal contracts were cash settled. Now they're deliverable. However, having said that, there was a crying need in the market for these mini contracts. These mini contracts are 1/5 of the larger contracts. The larger contracts are 5 tons. This is 1 ton each. And the need was because if you look at various market participants, everyone was wanting this contract. If you see MSMEs and SMEs, for their hedging requirements, they needed this contract because it may not be feasible or required by them to have larger contracts and hedge in larger contracts. If you look at arbitragers or traders, they also might be having a position in the larger contract, and they might want to do an arbitrage between the larger and the smaller contract. Or if someone has an option position, he may want to do a delta hedge with the smaller contract because it will give a more precise hedging. Smaller traders may not want to take such a large exposure in a 5-ton contract, which they could do in a 1-ton contract. So, effectively, there is something for everyone in these mini contracts, and that is why the market had been wanting it. And thanks to SEBI, we have brought these contracts, and we have seen very good response for these contracts and very good participation. We launched the aluminium contract and the zinc contract was launched on Friday, aluminum contract was launched on Monday, and tomorrow we are going to launch the lead mini contract. Going forward, we will try and bring more and more such contracts, whether it's mini, large, to the market, so that more and more options are available, not options in terms of futures and options, but more and more instruments available to the market to trade. Of course, both futures, options, and index futures, we will try to bring whatever suits the market. But as I was saying, this market is reaching a certain level of maturity. And I'd like to dwell upon it a little bit, because if you see that this market in terms of overall turnover has grown massively in the last 3 years. In 2021, our turnover from options was roughly 900 crores per day notional. In 21-22, it was roughly 8,600 crores. And it's all single-sided. And this current year, we are crossing 30,000 crores. So you can imagine that what is the kind of growth in this market. And this is all thanks to all of our members and our stakeholders and all the clients who trade on this market. So of course, there must be something right in this market, that all the participants in this market are increasing their participation, reposing their faith and trust in this market. And as if, our logo is with MCX, it's trade with trust. So, thanks for your trust. Thanks for imposing your trust. And I believe and I hope that you will, appreciate these mini contracts as much as you have appreciated the other contracts. And as we bring more and more products to the market, we see that the commodity markets are attracting more and more interest from traders of various kinds. So I would say that the commodities is an idea whose time has come. Commodities is very essential for all of us as not only a financial market, but as an economy, because India being one of the largest producers / consumers of various commodities and including base metals, we need a proper price risk mechanism, price discovery mechanism, a trading mechanism, so that we can have a domestic price. And that's exactly what we've done in base metals. From a cash settled market, which was following the international market, we have created a domestic benchmark for pricing, price discovery, price risk management, and also deliveries. And we've done a huge amount of deliveries on the exchange. Chittaranjan will fill you on those details later. But going forward, I believe that this market would only grow and will grow in an exponential manner, given that the traction which was required, that basic trajectory which it has got, now it will put this market into a greater orbit. So thank you everyone for appreciating these contracts which we have launched, especially these mini contracts, and we continue to look forward to your support to grow these. And I would also like to mention that there is margin benefit between the large and mini, and it is fractional margin benefit also. So for example, if you have 5 tons of mini bought and 5 lots of mini bought and 1 lot of large sold, of course you'll get the 75% margin benefit. But even if you bought two lots of mini and sold 1 lot of large, then also that, to the extent of that 40% margin, 40% position set off, you'll get 75% margin benefit, and the rest 60% of the position you will not. But that is also huge. So this fractional margin benefit is also something which you should take away with you and understand. So overall, it gives people a lot of scope to create positions, to do spreads, to do pair strategies or calendar spreads, etc., whatever your strategy may be. So minis are something which I believe appeal to all, and look forward to your appreciation, not only theoretically, but in practice by, showing us more and more participation in these mini contracts. So thank you, and back to you, Steve.
Thank you so much for the wonderful information, sir. I request Mr. Jigar Pandit, Head Commodities Business Sharekhan, to take over now.
So good evening, everyone. And on behalf of Sharekhan, I would like to thank SEBI for allowing these mini contracts, which was a need of an hour, and congratulating MCX also for launching this product. So so far as product is concerned, I think this product was a need of an hour, when I'm saying, which means it was required the retail level also, because we do a lot of, as a retail broking, we do a lot of events across India for commodity awareness programs, auction awareness programs. And most of the events we get the feedback that when are you going to launch, or when is SEBI going to allow the mini contracts, because they wanted to participate in the mini contracts because they feel the base metal rally can go up. So because of the larger contracts, they were not able to participate. But post launching this contract, I think the participation is very well accepted across the industry players, and even at the retail level also, this product has been very well accepted. And I believe even if you see the historical data also, say 2016, 2017, 2018, 19 also, if you see by and large, the aluminium was around almost two times of the regular contract. So if the futures was trading 100 lots, the mini lots were trading around 200 lots. Same is the case in the zinc also. Aluminium, almost two times of the regular contracts was the liquidity. So which effectively means the participation was very high. And the participation was high because the bid-ask spread, or what we call it as an impact cost, was very low, which was helping the retail client as well as the hedgers also. The small-time hedgers who wants to hedge for their regular consumptions for a smaller lots, that has helped them, that has appealed them for these contracts to participate. And definitely there was a cost advantage for them also for doing the participation. And because of the longer time period, that has increased the volume also. So by and large, I see welcome product by the industry, by even the retail products also. So thanks to SEBI, and congratulating MCX also for launching this product.
Thank you very much, sir. I would request Mr. Chittaranjan Rege sir to give more information on this. Over to you, sir.
Thanks, Steve. Thanks, ANMI, for organizing this event. I mean, to highlight what Rishi gave and what Jigar gave, I mean, completely summarizes the importance and the criticality and how we feel passionately about the mini contracts. What are being, I don't know whether to say it's a relaunch, but I mean, we're back to those contracts are now back on the on the bosses, so that people can access those. We all have a history as to how we thought is the utility of mini contracts. Now we have seen both these 5 ton to 1 ton. Now when I say currently mini contract, because we have not done anything on nickel and copper in terms of mini, so those are right out of the purview of what we are talking today. So we basically are focusing on aluminium mini, lead mini, and zinc mini. So when I say about these mini contract, we have seen, so I think it was in 2010 is when we probably launched the cash settled version of the mini contracts, and until June 2019, those remained so to be settled based on the overseas prices using the RBI reference rate. But it was in June 2019. I mean, in fact, 2019 has been a watershed year for us. So June 2019 onwards, we converted the mini contracts of these 3 into delivery settled. So we have seen, I would say, nearly 7 months of trading in the calendar year 2019, when the aluminium, lead, and zinc have concurrently traded both the contracts of 5 tons and 1 ton. So it was just like a refresher, I'm saying, but since then, we had to migrate into a single contract, and now we are back with the offering of 2. But there are a lot of changes which have happened since 2019 in terms of the way in which the contract design now operates in the deliverable mode. So there are few highlights which everybody must know, and it's important that everybody is aware, because we're still about a month away from the first settlement in the new avatar. But the changes which have happened compared to the last one, 2019 and today, are like this. First is the number of delivery centers. So number of delivery centers on all practically are now pan-India. So aluminium has got 1 extra, but otherwise, north, which is Palwal, west, which is Thane, east is Calcutta, and south is Chennai. So these 4 are integral to all 3 contracts as a delivery center. The only exception is of aluminium, where the primary delivery center is Raipur, and for zinc the primary delivery center is Thane, and for lead primary delivery center is Chennai. So having said so, what's critical is that we do not offer any premium or a discount to any of the locations. So what it means is that wherever the delivery comes, our assessment of the thing is that it's a delivery of last resort. We don't offer any premium discount to any location. The convention has been that ever since we have migrated the aluminum contract to be Raipur based, which happened in sometime in August 2021. So in the previous avatar, mini contract was also the primary delivery center was Thane, but that has also changed. So on aluminum, the primary delivery center is Raipur, and there is no premium discount to it. And most, in fact, as of today, the entire inventory which is lying into MCX is at Raipur. That's one. Number two, talking again about the aluminum contract, that like we introduced, we converted the aluminum to be the primary delivery center in Raipur. The same time, we also added the different, I would say, shapes, which is SOs and T-bars also into the aluminum contract, which is 5-ton contract then. But why I'm highlighting this is, while Raipur remains the primary delivery center for aluminum mini, there is no provision for delivering SOs and T-bars into mini contract. So mini contract for all three contracts, aluminum mini, zinc mini, lead mini, will remain only ingots. The smaller version and the ingot bundles, which means ingot, they're strapped into multiple ingots are strapped into a single bundle of 1 ton with the tolerance limit of 10%. So that's the important thing to know, that number of delivery centers compared to what we were aware of or what we were habitual of in 2019 versus today, number of delivery centers are far more. We are pan-India present. There is no premium discount between the geography. And in aluminum mini, there is no provision to deliver SOs and T-bars. So this is broadly sums up as to what is the difference other than the quantity, which is 1/5, 1 ton, and the changes compared to what it was previously and what it is today. These are the ones. Rest of the things, I believe that enough has been said about the MSMEs and the physical market entities, how they will get benefited. We continue to believe that our primary objective is to offer the price benchmarking, price discovery for everybody in the value chain. So producers, consumers, value addition guys, and everybody to refer to us in their bilateral negotiation, arrive, so that it gives a price referencing and price discovery is one aspect. Another bigger aspect is one can then hedge to remain or to keep their margins intact. So that's the primary motive. And obviously now that it is a delivery settlement, so which means it's a delivery destination of a last resort. So I mean, if you are not able to dispose your goods elsewhere, the producers can deliver into a platform and happily get reimbursed on the exchange. That's one. In the experience during the pandemic has been fantastic in terms of delivery-based contract. Now, the way in which it is fantastic is if you try to imagine the lockdown period, the first one where probably we all heard about the lockdown and what it would, how it will make the life stand still first time. And now imagine what trade would have gone through when the high seas metal was coming to onshore or inventories were lying anywhere and they had nowhere to dispose. That's where we believe we play a very, very critical role. That amount of metal which was lying with whether producers, consumers, or traders, everybody tried to deliver and dispose that thing on the MCAs. And at one point in time, on an average, at the moment, we have inventories of all metals put together somewhere in the range of 8 to 10,000 tons of metal. In those days, we have seen north of 23,000 tons, and this was in 2020. So lot of experience, every settlement has taught us and given us new perspective. Since then, close to about 283,000 tons of metal has got delivered via the settlement. As much would have got delivered into our warehouses and gone out of it. So the physical market has understood the entire mechanism pretty well. So we constantly believe that we have done enough for market to connect and find comfort in what we have done. And I am sure that with the smaller versions, I think the audience, the retail audience, or the financial players who otherwise felt left out, because of the margin getting revised higher the prices being higher, the quantity per lot being higher. Obviously, there were challenges that with the limited limited capital one would have in hand, what all it could participate. So now this brings an aspect, a perspective, and offers a a good scope for people to participate. So I believe that on 17, now that we're done with zinc mini, yesterday we're done with aluminum mini, and tomorrow we'll be launching lead mini. The entire gamut of what we could have done in one go with the trading lot and delivery lot being identical has been listed. And I believe this brings a lot of opportunities to the ecosystem, and I'm sure the Jigar and Sunil and Ramesh and everybody else who is listening to this, I'm sure they are going to promote and encourage wider participation for the success to be widespread. So I'm eagerly looking forward to hear what the thoughts are. But I'm sure with the entire capacity or the feature with which we could have done, we have brought the contract back on MCX, and I am sure that it would do good to the retail and the MSME segment alike. Thank you very much.
Thank you so much for the value-added information on mini contract. We have a couple of questions coming from our members, which we'll take on a later stage. I welcome again Mr. Ramesh Varakhedkar to give his words in this webinar. Over to you, sir.
Yeah, firstly, thanks for inviting me. Thanks to ANMI for organizing this session. And a big congratulations to MCX on launch of these mini contracts. MCX has been really a vibrant exchange now. And I also congratulate for the highest turnover which happened last week. So Rishi, Rege, a big congratulations to you all. And with options and mini contracts, I'm sure that the way is only upwards from here. So yeah, mini contracts is good for retail, bigger contracts, bigger margins, smaller contracts, smaller margins. So it's pretty easy for retail investors or traders to come and trade with these mini contracts. And as you all know, exchanges for price discovery and risk management. So all these SMEs who are there, who have exposure into these base metals, will be able to come and hedge on this particular platform. I still remember last week I had one interaction with one of the corporate SME from Chennai, and he had an exposure of 18 tons for the entire year and was worried about the price risk. He keeps buying 1 ton every 15-20 days. So for all those companies with such a small exposure, was really very difficult to use that 5 metric ton contract. I was giving an example of copper. I know copper, we don't have the mini contract as of now, but I was just sharing, like mini contracts will definitely help all these SMEs and MSMEs to come and hedge on this particular platform. And I believe minis will help grow the market, expand the commodities market for both retail and corporate. I'm pretty passionate, and every day morning I start with the numbers. What has happened in the previous day on MCX, the retail participation, the prop side and on the corporate side. And I see a small portion which is from value chain participants. But I'm sure with this mini contracts, that number or percentage of participation will definitely grow up. Yeah, few points that I wanted to highlight for all the retail investors who are there. Like the difference between the mini contracts, which was before, that is 2019, and now, the biggest difference is now all these mini contracts are compulsory delivery. Earlier, it was all cash settle. So the retail investors who doesn't want to take delivery or give delivery should be a little cautious on the staggered delivery period and close their positions before getting into staggered delivery or roll over their positions. That's one thing that all retail investors should watch out for. And the second thing, when I talk about corporates, as of now, it's only the first month which is liquid. Going forward, I hope second, third, fourth month may also get liquid, because that's what corporates want. Corporates don't come as a trader to hedge for 15 days or 20 days or for 1 month. So hopefully we'll have liquidity for second, third, fourth month, which should help. I also have a suggestion, if it can be taken up, like what we saw in 2018, where RBI mandated all bullion players to hedge gold domestically. So if at all there can be something, say if not 100%, get 10%, 15% of 20% of the exposure to hedge base metals on MCX in India. Companies like Hindalco, Nalco, Balco, if they're mandated, I'm sure this market will grow phenomenally. So that's a suggestion. And maybe we can have metal index on minis, right? That should also help grow the markets. And obviously, Sonepe Suhaga would be going forward once markets are big for mini, options on mini. So these are all the few things that I had in mind. One thing is for retail investors to be cautious about, and the three things which will help us to grow market from here. So that's all from my side. Thank you.
Thank you so much for the enthusiastic expression of yours towards the launch of mini contract, and of course your valuable suggestions as well. Thank you so much, sir. I request Mr. Sunil Katke, Heads Commodities Retail Business at Kotak Securities, to share his words.
Hi, good evening to everyone. Thank you for the opportunity. First of all, I would like to take this opportunity to congratulate MCX for the launch of the mini contracts. I would also like to thank ANMI for organizing this session. It's a welcome step from SEBI, I can say, for approving the mini contracts. I, being a part of broking industry from last 18 years, in a way, I have seen commodity businesses grow from scratch to the numbers that we are seeing today. But when we compare commodity volumes with that of equity derivative volumes, I can say that commodities even today stand less than 1% of the total volume that we see on the equity derivative front. This brings us to one conclusion that commodity has a massive potential in Indian market. Even if we tend to see commodity markets reach a potential of say 10% of equity markets, we are actually thinking this market from current level can grow by 20 times. So when I say 20 times, we are talking about a huge growth opportunity from here. So this tells us the kind of potential commodity markets have. And when you want to encash to the potential, you'll have to make sure you have a bouquet of products available. That bouquet of product availability is something which is very important. Currently on MCX, if we see a majority of the participants are actively participating in the energy segment, like crude oils and the natural gas. And these two contracts contribute close to 70-75% of the total volume. We see similar phenomenon happening in equity derivative segment as well. In Nifties and bank Nifties, they contribute bulk of the volumes. When it comes to the other commodities like gold or silver on the precious metal side, or the base metal front, copper, aluminum, zinc, nickel, obviously these commodities are also gaining momentum. As the other participants highlighted, the launch of mini contracts will now bring in the attention of the retail participants. See, earlier, I'm heading commodities retail business here at Kotak Securities. I tend to interact with a lot of retail participants. Most of these retail participants come with 50-60,000 rupees margin money. So if you ask them to trade in, say, regular contracts, say be it zinc regular contract, 5 tons, the margin requirement will be close to 1.4 lakh, and the aluminum regular contract will be close to 1 lakh as per the today's margin. But the moment we hear that there is a 1-ton contract also available in zinc and aluminum, now the margin also goes down by 5 times. Now, even if a person has 25-30,000 rupees margin, he can participate in zinc. He can participate in aluminum also with 25-30,000 rupees margin. So earlier, retail participants had only silver mini contracts, silver micro contracts available for them with that less than 50,000 margin availability. Gold mini and gold petal contracts were available for them to trade. But now they can trade in zinc mini contracts as well, where, like I said, the margin will be close to 25-30,000 rupees. Aluminium mini contracts also can be traded with 21-22,000 rupees margin. So this is a massive jump for retail participants to broad base their horizons and obviously extend their exposure to commodities like zinc and aluminum, apart from gold mini and silver mini contract. This also reduces a lot of risk-related parameters, like Ramesh highlighted. With smaller contracts, you tend to reduce the risk, and that is the overall objective of this market. Even SEBI or MCX or the members, they all try to ensure there are instruments sufficient enough to reduce the risk of a retail participant who is actually coming out with a smaller margin to invest with. So mini contracts will certainly help in building a safer strategy for most of the retail participants. On the corporate or institutional front, also, as Ramesh rightly highlighted, now the corporates or institutions or MSMEs can hedge to the fractions as well. Like if I want to hedge, say, 12 tons of aluminium, I can simply take, say, 2 regular contracts, which is 10 ton, and 2 mini contracts, which will help me in achieving 100% hedge instead of me hedging only 10 tons or 15 tons before. So this is again a good advantage for the MSMEs or the corporates, and even investors who are taking positions with a view orientation. Then ideally even these guys can use smaller contracts, so that gives them an opportunity to average their holdings at a different price range. If I take exposure of 5 tons at once, possibly averaging one more lot at a lesser price will attract more margin. Because obviously I'll be adding 5 more tons, but when it comes to mini contract, I'm adding 1 ton today, and if the prices go down, I can add maybe 1 more mini contract, and likewise possibly I can average out my price. So even strategy building that becomes that much easier. We do have calendar spread contracts available here for people who do not wish to take open-ended positions. They can make the most of the calendar spread contracts also available in the mini contract. So all in all, from my perspective, retail is a massive participant in commodities business. Commodities business being less than 1% of equity derivative market has massive scope. We are actually very much positive that the next 5 years will be pivotal in commodities business space in India. And we tend to see commodity market will at least reach a potential of 10% of that of equity derivative market. And that will, possibly take this market from current level to say 20 times bigger market. And these contracts and welcome steps from SEBIs will certainly make sure the platform is set for all the participants and make the most of the opportunities that are available. So all in all, it is a welcome move, and I would like to congratulate MCX again. And I would like to ask all the investors, retail or corporates, to make the most of these mini contracts that are available for meeting their needs. Thank you very much.
Thank you so much, sir. We have a couple of questions from our viewers. The first one is, what is metal trade? How to do? I guess Rishi has already explained it in his words when he began with his words. Would you like to answer it again, sir?
Yeah, sure. So we have 5 base metal contracts listed on the exchange: copper, lead, aluminum, zinc, and nickel. You can trade on any of these contracts on the exchange. These are the 5 base metal contracts. Of course, we have precious metal contracts also, which is silver and gold. So depending on your requirements or your interest, you can trade in any of these base metal contracts. Today, we are discussing the mini contracts on 3 of the base metals which we launched, which is zinc, aluminum, and lead. Lead will be launched tomorrow. So depending on your size of your exposure which you want, you can trade in the larger contracts, which are 5 tons each, or in the smaller mini contracts, which are 1 ton each. And thereafter, when you take an exposure, these are futures contracts. We also have options on copper and zinc. So if you want to trade in options, you can trade there also. So once you take an exposure, if you're in futures, if the price goes up, you will gain. If the price goes down, you will lose. On the other hand, in options, if you buy a call option, if the price goes up, you will gain. But if the price goes down, you will not lose, because you've already paid an upfront premium. On the other side, if you are betting on the market going down and you buy a put option, if the market goes down, you will gain. If the market goes up, you will not lose, because you've already paid an upfront premium. So this is, basically what you do in order to trade these markets. Of course, we also have an index called the Metal Index, in which all 4 of the base metals are there. And it is there also. You can approach this market through a basket and trade that also.
Thank you so much for answering that question. I have posted a question on the comment that one of our viewers have asked us, when will trading start in nickel? Are there any plans for crude or NG mini contract?
So, we already have the nickel contract. Due to the international debacle which happened on another exchange globally, the nickel contract dried up in trading. We are trying our best to, revive it by, and relaunch it in some way which is more palatable to the market, because as of now, the lot size is huge, and because of that, the margins, as Sunil was also mentioning, are prohibitive for smaller traders. So we will definitely look at getting some traction there. In terms of other mini contracts, of course, we are exploring, and as and when we get, we understand that there is a need to launch them and we get regulatory approval, definitely we'll bring them.
Thank you, sir. The next, I guess this is the last question, which is, That someone has asked for any plan for energy complex mini contracts available, and same for copper mini.
Yes, I've already answered about the other mini contracts. Ranjan, would you like to talk about copper minis?
Yeah, see, the way in which the existing 3 contracts have come, the aluminum, lead, and zinc, there is very unlikely that we would have a mini structure like this for nickel and copper in near future in that format. There requires to be some iteration, some changes, some rethinking, or a different approach to make it more affordable for wider audience to come in. This is it is at a discussion stage. While we're trying hard to get some life into nickel 1.5 tons, copper anyways is doing pretty okay on 2.5 tons contract lot size. But the essentially the query is that whether can we look at a smaller variant of this thing. So with the existing norms of the trading lot being equal to delivery lot, it is difficult. How can we approach this thing alternatively is what is being explored and discussed. So I think once there is something productive we can offer to the market, we will come back to that. But it says right now it's more of ideation which is going on to see as to what can be done to make it widely acceptable.
Thank you so much for answering that question, sir. I understand that there's no more questions from our viewers, and whatever information you have given to them, they are much edified with all the information regarding the mini contract. Thank you so much, Rishi sir. Thank you so much, Chittaranjan sir, and Sunil sir, Jigar sir, and Ramesh sir for being on the webinar this evening. We thank you on behalf of ANMI, and thank you very much for being on the show today.
Thank you very much, and thanks very much for
Thank you very much.
Thank you.
Thank you,
sir.
Thanks a lot.
Thank you all the participants and the speakers. Thank you.
Thank you.
Thank you.